Dr. Zainulbhai was previously with McKinsey, a firm where he has served for 34 years. He's currently senior advisor and was most recently director at the McKinsey office, India. He serves in various boards in India, including Reliance, Cipla, L&T, and is also on the Association. He, in fact, heads that panel. Without further ado, I would like to welcome Dr.
Doctor नहीं मिला अभी तक.
Afternoon tea. Please join me in welcoming.
Thank you very much, but the only thing I will say is that I was not such a good student that I got my PhD. So I'm not a doctor as yet. Of course, Nitin might decide he wants to give me one or something, but I'm not a doctor as yet. I'm just a humble MBA. Okay. Thank you very much, and it's a pleasure to see all of you, and not just students, but many of friends from India who have come here, whom I meet many times in India. It's wonderful also to see several McKinsey Mumbai office alumni who are at HBS, and to see several professors whom we've run into. So I feel a little humbled in talking to this group, since many of you will know quite a lot more about some of the topics that I'll talk about. But I hope that I can give you a little bit of overview, and then let's have a dialogue after that. So I'll try and talk for about 20 minutes, and then we will actually have a discussion and questions. And the only request I'll make is that when we get to the questions, that they are actually questions, okay, and no speeches for that. And that as the speaker, I reserve the right to not answer a question that I don't like. So I'm going to take actually quite an economic view to this. Let me just make sure I'm doing this correctly. Okay, I guess not. Okay. So from an economic standpoint and an investor standpoint, since Boston is home to many investors who are investing in India, really the question on lots of people's mind today is, are achhe din here? For those of you who don't know Hindi, it means, are good times really here or not? This was one of the campaign promises of the current government. But more importantly, when you think about a country of 1.25 billion people whose lives we are trying to improve, it's not achhe din for the sake of saying achhe din. It helps improve the lives of a very large proportion of humanity. And that's the reason for improving the economics of India and getting economic growth. It's not so that in the world league tables it looks good. It is so that we can improve the lives of 1.25 billion people. So keep that at the back of your mind as you look at economic statistics and what we're trying to do. So let me start out by saying it's a very interesting set of people who are trying to architect what the economic policy and what the economic programs of the country should be. For the first time, and of course, there is a Harvard professor, not professor, but there is a Harvard MBA in there if you can find him. Oh yeah, there he is, Jayant. But actually it's a very interesting group. I don't think anyone thought about putting a collection like this together, but when you look at the collection, it's a very interesting and qualified global group that is involved in this. Many of you, of course, know Arvind Panagria from Columbia. You know Raghu, who has been a huge hit as one of our very catty columnists said about him, he's put the sex back in the Sensex. Sorry, it's not my quote, but it's a wonderful quote. Jayant Sinha, who's just been made Minister of State in the Finance Ministry and is actually very, very, very qualified for this, not just because of his background at Harvard and McKinsey, but because he's a very articulate exponent and can explain very crisply what's happening in the government. And Arvind Subramaniam, who just joined as Chief Economic Advisor and had been at the Peterson Institute and IMF for a long time. So if you thought about a group of people who have had real global experience in trying to craft what the policies should be, this is quite an amazing group. It's tough to come up with a group that would be better than this. So I think, at least as a start, the set of people who are thinking about this, I think, is something that would give us some confidence. So I thought I would summarize on a few things as to what's been happening over the last few months, And of course, this is my judgment, so you can agree or disagree with it, but I thought I would at least share with you a little bit of what's going on. From a macroeconomic standpoint, for the past few years, we suffered from twin deficits, which was the current account deficit and the fiscal deficit. And that caused a lot of concerns from investors around the world and in India, where if your current account deficit is very high, it affected the rupee, and if the fiscal deficit was very high, it affected the inflation rate as well as the ability to invest in India. And if you look at all of those, both of those, over the last 18 months to 24 months actually, from the previous government to this government, there's been a lot of progress that's been made on the current account deficit, which is now at 1.2 or 1.3% of GDP, down from about 4.5%. And in terms of the fiscal deficit, the latest budget says that the fiscal deficit will go down to about 3.6% in fiscal year 17. It used to be at 5.4% at one stage. Both of those are big macroeconomic conditions that provide the conditions for lots of other things to happen. One of the things that has helped enormously is the fact that we got a $50 billion a year gift from oil prices. As oil prices fell, the subsidy, because there was a huge subsidy on diesel, has come down dramatically, and the current account deficit has also gone down because the cost of imported oil, which is something like 85% of our requirements, went down. As one former finance minister, to be unnamed, said, "A brilliant fiscal policy at $150 oil looks terrible, and a mediocre fiscal policy at $60 oil looks brilliant." And without going into the details of those, we are all very happy with $60 oil in terms of the effect it has on a consumer country like India. And every year that the oil price stays below $100, I think helps the economy quite a lot. If I look at inflation rate, it's come down from a high of 11.4% to about 5.4%, which I think is a huge drop. It affects many, many, many things in India, including the interest rates. And as you all might have seen recently, the central bank lowered some aspects of the interest rate by 25 basis points. And it looks as though going forward, it might do some more. I put it as a yellow, not as a green, because we haven't seen sustained 4 to 6% inflation for like 12, 24 months. I think when we do that, then that will be in a much better position. But the direction is a lot better, and if inflation rates come down, it will help the macroeconomic conditions in India dramatically. Then we go to exchange rate. Many of you who invested in dollars in India over the past few years remember the date that it dropped from something like 42 to 63 and saw a lot of your investments go down. Over the last 12 months, the rate has been stable. It's probably among the stronger currencies against the dollar in the emerging markets. And there seems to be some stability in that. If you look at some underlying characteristics, underlying reasons, it is now more like what the exchange rate should be based on inflation rates, trade, et cetera, and so it looks a little stable. And then the fifth aspect of macroeconomic front is growth in credit and NPAs of the public sector banks. And I put that as red because we are only just starting to see any difference in it. And this is something that people do worry about as to how can you get credit growth if there's a large amount of NPAs, and without credit growth, will business grow or not? So a quick snapshot of the macroeconomic conditions suggests that things have gotten better. On some fronts, they've become done quite well, and we'd love to see all of it green, but very rarely do you see all of it green for any country. So there's a big step forward from where it was. There's a couple of areas to watch out for, but it's a big step forward. When I talk to international investors, as I said, some of you are over here, they normally talk about 5 pain points, and maybe there's a few more that they can talk about. But the first pain point that they always talk to me about is, I'm trying to do everything legally, but if I do something, if you change the regulations retrospectively, then how do I invest in India? And so retrospective regulation was one of the biggest problems that investors in India had. Interesting thing on that is that the government has stated very clearly that going forward, there will be no retrospective regulations. The ones that have the cases that are already taking place as a result of regulations, that things that were done previously, have to work their way through the court system. In India, whether we like it or not, the judiciary is actually independent and doesn't seem to follow the direction of anyone else, and so it has to work its way through that system. And if it does, as it does, I think many of these things will get clearer. And this one particular regulation called GAR has been postponed by 2 more years. So I think investors are quite happy about that. The second thing that people complain about is tax terrorism, which is wonderful. I wish, I don't know if tax terrorism is as bad as other forms of terrorism, but the fact that it's called terrorism was an interesting description of what people were complaining about. And the complaint was that in India, a large number of tax officers can individually make a decision on something, and then that locks you into, to fight it, you have to then pay that amount and then go back and fight it. And it was just a mess. And it slowed down many investments in India. On the issue of tax terrorism, there's also been quite a lot of movement, because the tendency now is to change it from having any individual officer take a decision that affects things on a very large case, but to actually refer it to the senior officers who can then decide and slow it down if it's a crazy idea or not. So there seems to be some movement on it. We have seen fewer tax terrorism cases recently than we have in the past, and maybe that as that goes away, that investors will start investing. A third thing that people talk about is, I can't get a decision. I met the CEO of a company that's investing in a large plant in India, and he said, we've been trying to get all permissions for the past 7 years. And every time there seems to be some new thing that comes up, and if they said yes or no, it would be okay, but we can't get a decision. And so everyone and business was looking for, can we speed up decision making? I would say on this, there is some movement, and I'll talk about that a little bit. But we also have to recognize that bureaucracy in India is a 1 million-person army. And it takes time to move a 1 million-person army, and not everybody gets the message or moves in any direction at one point in time. So I put that as a yellow, because I think there is some movement on it, but it hasn't yet completely changed. The fourth thing that everyone talks about, and you can imagine which industries are asking this question, is the insurance industry and the retail industry are continually asking, when will we be allowed to have FDI in India and get it to 74% or 51%. And I would say in that, on insurance, the bill has been passed and that will move through. On retail, I don't think it's going to happen. Multi-brand retail is not going to happen for some time, so I put it as a multicolored pill over there. And the last one, which affects one industry in the US quite strongly, and as a result they raise it substantially, is the issue of pharma IPR. Every investor, or every time we talk about investments in India, this issue comes up. And to be honest, there's some movement on it. The US and India have set up a group to talk about it, but I think it hasn't yet resolved itself. So I put it as a yellow, that there's some movement. I could show you a lot of charts on each of these, but I wanted to give you a broad view that the direction of the economy, broadly speaking, you can sum this up any way you want, but broadly speaking, it is moving from yellow-red to yellow-green. Okay? It's roughly moving in the right direction. The pace we will discuss in a bit. Okay. So, foreign investors, let me come back to my favorite term. One of the very interesting things that's happened over the last 18 months is India's become the darling of emerging market investors. And in fact, a very large amount of money has flowed into India. And investors have put in about 20 billion in equities last year. And the first 2 months of the year, there's another 5 billion that's come in. Part of the reason that the Sensex has gone up as much as it has is because of the interest from emerging market investors and international investors. Now, I'll let you in on a secret. One of the best things that's happened for the new government is that the markets have gone up. And one of the biggest drivers of the market going up is institutional investors from outside India. So I did this little analysis. HBS always said, you should make a decision whether you have facts or not, but I like to get facts. So I looked at the top 100 foreign institutional investors in India, the portfolio. And in those top 100 investors, either the portfolio manager, the deputy portfolio manager, the economist, or the analyst is an Indian. It's true, you can try it. They may be born in the US, they may have been born in India, but it is amazing how many Indians there are in the FII world. And which raises this question, which is, when the diaspora thinks well about India, good things happen. And when the diaspora gets really upset about India, it's going to be really bad. Okay, so it is very important. I hope that settings like this help to make the diaspora feel good about India. So equity investors have done extraordinarily well in terms of putting money into India. Debt investors, actually, it's very interesting that Indian debt of private companies has suddenly become a hot property in the global world. So last year, another $18 billion of debt was raised by Indian companies, and in the first 2 months, another $5 billion has been raised. This is a new phenomenon. 3-4 years ago, we didn't have as much debt being raised. So there is a lot of money flowing into India in both debt and equity. And FDI has gone from a red to a yellow, which is, it hasn't yet hit the peaks that we saw in 2007, 8, and 2011, 12, but it's coming back up. So I'll give you a little bit of, when I first went to India in 2004, at that time the Prime Minister, Dr. Manmohan Singh, got a group of NRIs together, some folks from Harvard and others, and said, for the last 10 years, from 94 to 2004, the average foreign direct investment into India was $2 billion a year. Okay, at that time, China was getting about 40 or 50 billion. And he said, we ought to do something. What is it that's stopping people from investing in India? And why don't we create a plan to raise it to 15 billion? So a set of NRI investors and others helped coming up with some plan. And the people working on it said, 2 to 15 is a pretty big jump over 5 years. Maybe we should aim for 10. And I think the Prime Minister said, let's aim higher. And in reality, it went from 2 billion to 42 billion by 2011. It's a huge increase. So when we had the decline over the last 2 years as the economy slowed, it only went down to about 25. And this year it's going to be back to about, last year it was back to about 37. So FDI is actually continuing in India, just not at the rate we've seen, and that's why I put it as a yellow. Okay. Now, I spent some time talking about the economy, but when one looks at what's happening in India today, obviously one has to take a broader look at what's happening with this government and what they're trying to do. So I think you have to take at least 3 lenses to it. One is what's happening on the economic front, what's happening on the foreign policy front, and what's happening for the individual citizen in what I call citizen services. And I think it's a combination of those that actually gives a picture of how these things are going to affect the economy. So let me pick a couple of those and just talk to you about those. We'll talk about on the economic front a little more as we go forward. But for individual citizens, it's important to improve their lives. This is what I talked about, which is the goal of growing the economy is to improve the lives of individual citizens. And several of the programs that have been announced and that things are moving fast on, several of them were started by the previous government and are being accelerated here, but they affect the ordinary lives of citizens. So I'll give you 2 examples. One of the big financial inclusion areas that we talk about is now being called JAM, which is a combination of 3 big programs. One is to get a bank account in the hands of every Indian, to get an Aadhaar card, which is a universal ID card in the hands of every Indian, and M is for mobile. So A is for Aadhaar and J is for Jan Dhan Yojana, which is a bank account. If you get all of those 3 things, it fundamentally changes financial inclusion in India and brings more assets in. And obviously none of the people in this room have any problem proving their identity or getting a bank account. But for a large proportion of people, the ability to prove your identity and the ability to get a bank account is actually quite a lot. And if you go talk to many citizens, including many of the folks who work in the cities for us, our cooks, our drivers, our maids who never had bank accounts, suddenly they all have a bank account. And they can actually deposit money in it and get government subsidies in it. And so it helps enormously to do that. I think, we all initially thought that Swachh Bharat, which is Clean India, was a wonderful gimmick. It sounds great, but will it make a difference? But I think it's quite interesting as to what a chord it has struck with lots of citizens who would like to see a cleaner India, who would like to have great sanitation. And so it's picked up quite a lot of momentum. So I think we have to keep that in mind. And on the foreign policy side, to be honest, because the present government didn't have much experience in foreign policy, one didn't really expect a whole lot. But in reality, it's been quite interesting how much movement there has been on the foreign policy front, both on the economic front as well as just relations. And in the first 9 months, I think the visit to the US was a huge success. The visit to Australia was a huge success. The visit of the Chinese premier to India was a huge success. And I think relations with our neighbors is improving. It's important because when I come back to risks for the economy, there are a lot of risks in the economy that have to do with our neighborhood. We're just in a dangerous neighborhood. And if these relations go well, it would be great. Okay. I'm just going to quickly go through a couple more pages and then we'll stop. So let me talk about what's the style of working of this government? A lot of people want to know, how does it work? I'll start out by saying that the PM sleeps about 4 hours a night. When he and Obama met, you must have seen the pictures of the two of them having tea in front of the Red Fort and all of that. It's a lovely picture. I'm sure the publicists thought about exactly where they should sit. One of the things they talked about was how much sleep they get. And so Obama said, when I first started, it was, there's so much to do and all, and I could hardly sleep 5 hours a night, but now I think things are better and I can sleep 6 hours a night, or something like that. I'm exaggerating, obviously. And the Prime Minister said, well, for the past 25 years, I sleep about 3 to 4 hours a night. And the way it affects it is actually that, the PM works a lot and expects that his personal staff will work an enormous amount. And so a lot of things are getting centralized in the central government to the PM, and it's being driven out of that. So the good news is that because of his personal energy, many things happen. If he wants to drive it, many things happen. The bad news is, this is a country of 1 billion plus people, and there's a huge amount of stuff to be done. And if things just get centralized to the PMO, then it may become a factor in slowing things down. The staff has increased 3x. They can't keep up with it. I was talking to one of the secretaries in the PMO, and he said, basically, we used at 11 o'clock or 12 o'clock in the morning, we would go to the PM and give him a list of calls that had come into the office. And then he could decide whether he wanted to do this, return them or not. He said, with this PM, we get that many calls in 30 minutes. And so every 30 minutes, we have to go and give him a list of calls that have come. And those don't include the ones that he gets on his private phone. So it's a very interesting dynamic that occurs. And I want to give you one more story about the bureaucracy, because we always love stories about the bureaucracy, right? So one of the things that the PM did, just because he gets up at early, and what do you do for 2-3 hours when you get up that early after you finished your yoga and had breakfast? You start thinking about things you want to do. So he would start calling people, and he said, I better wait till 9 or so, and then I'll call some of the bureaucrats. And whoever he called was not there. So in the first week, he called some 6 of them, and the phones rang. No, they didn't answer, the secretaries didn't answer, nobody was there. And so he made a big to-do about it and said, this is ridiculous. Why is it that people are not there in their offices at 9? And lo and behold, within a very short period of time, people started showing up in their offices at 9. Last week, I had a meeting with one of the secretaries at 8:45, and I took 2 other senior people with me. And they said, we've never come to this office at 8:45. It's sort of unheard of to be out there. And if you walk into any of the ministries in Delhi, because of Aadhaar card, they've created these very, very low-cost fingerprint scanners. I don't know if you've seen those, but they are. So when you walk into the ministry, there's a whole series of those, and every person who works there has to register in when they get in. Yeah? So now we know when people come in for work. And there's a website that tracks this, by the way. So you can go to a website and look at the attendance records of people in any ministry. I'm not sure you can look at the attendance record of an individual, but you can definitely look at the attendance record. So that's a little bit of what's happening in terms of how things are moving on the bureaucracy. Let me do a quick. So, the question on the economy is, look, we've had a lot of ups and downs in the economy. And if you take the new series, and I don't want to get into discussion of the old series and the new series, because that'll take a long time to sort out. But the question really going forward is the following. Under the new series, will the economy grow at its current rate, which is roughly around 7% in the new series, or if you are following the old series, about 6%? Okay? Or will it accelerate to about, a point or two above that, or will we ever get to a 10% growth rate, which is what we need to, which is what people aspire to if you want to lift a large number of people out of poverty and improve them and get them into the middle class quickly. Okay, that's the big question. You will notice that I've not really put a line going down, because unless we do something incredibly stupid or the external world stomps on us with $150 oil or $200 oil, there is a reasonable chance that we will achieve at least the bottom or the middle line. And I think really the challenge is what sets of reforms and what does one have to do so that we can go between the second and the top line. I think that's the real question. Many of the things that have been put in place by the governments over the years, not just this government, will allow us to do under the new series around 7. Okay, so that's the question. Let me just see if I can. I'm going to skip through a bunch of these and then just stop on Make in India and then I'll just end this part. One of the big initiatives of the government is Make in India. And I hope that this lion symbol, actually, you see it in a lot more places. The reason for this is actually quite simple, which is we can't create enough jobs in the Indian economy without having manufacturing grow to a larger proportion of the GDP. It's been stuck at 16% of GDP for a while. China is at 25%, depending on how you measure it. At 16%, if you keep improving productivity, you lose jobs, not increase jobs. India has 1 million people a year coming into the job market, and if we can't find jobs for them, we'll get social unrest. It's a very, it's a big issue, and that's why manufacturing has to do better. For many years, not only was there not much attention paid to manufacturing at the ground level, but in fact, many things went against manufacturing. So many duty structures are inverted. At the rate we were growing, we didn't really care whether we imported the products or not. But basically, India was not doing well in manufacturing. So the goal is, how do you get from 16% to something better? 20 maybe. I don't know if we can recreate what will happen in China, but at least get this much more. And so I won't say a whole lot more other than there are 25 industries where there is a chance to improve and make more in India and create jobs in India. I thought there were two very interesting things about this. One is that for the Indian government to come up with a lion and have 25 different lions of all different colors was actually was an act of creative genius. They actually hired a very good ad agency to do it. And the fact that we could move fast enough and be creative enough to hire a creative agency like this, I think says something good. I hope we can move as quickly on the other. I want to add one slide on there's one on the budget that I think would be helpful I can't find it, so I'll just talk about it. So on the budget, which was just created, that just came out about 2 weeks ago, there's a lot of discussion about was this a revolutionary budget or not? And the only observation I would make, and this is my observation, several investors asked me, so is this a Maggie Thatcher-like budget, or is this a Lee Kuan Yew-like budget? Okay, Maggie Thatcher is blow up everything and do something completely different. Lee Kuan Yew is just do a few things different, make it work, pay attention to making things work at the ground level. For lack of a better way, I'm just describing the two different things. So if you ask me within those two extremes, this is a Lee Kuan Yew type of budget. Okay, this is not a Maggie Thatcher budget. There are lots of things in it that are interesting and will help drive us to between 7 and 10%. There is no one thing that's going to blow everything up and make that difference. And I think, frankly, that's what's going to happen over the next few years. I don't think in an economy of this size and scale, we should expect something revolutionary. If you look at the budget, it had two big aspects to it. One was a whole series of actions to help make the business environment better, starting with make India easier to do business with. It's very interesting that, you can go talk to a secretary. I talked to the secretary at DIPP, Amitabh Kant, one of our very good guys who's driving Make in India. He can describe to you the 27 criteria that the World Bank uses to figure out ease of doing business. Okay? Just the fact that they can do that, and that what are we going to do to make a difference on each of those so that we can get from 140, which is where we are roughly today, to 50. Whether we get there or not, at least the effort that somebody's trying to understand it and push it in that direction, I take as a positive sign. I don't know if we'll get to 50 in the next couple of years, but hopefully it'll be a lot better than 140. So there was a whole series of actions that were devoted to improving the business climate. But as importantly, there were a whole series of actions that were devoted to what I called earlier, improving the quality of life for citizens, which included the national pension scheme. It included a better articulation of JAM, as we called it, etc. And I think as we go forward, you'll see this balance in both of those, going on both how to improve the lives of citizens and the economic part. And so I'd like to end with risks for the economy. What would drive it below the 7%? You remember I didn't show a line below that. But what are the things that are high risk that are risky for India as it grows? India is now more interconnected with the rest of the world than it ever was before. And so everything that happens in the external world affects us. And especially in the financial markets, a default on a Russian bond affects India immediately. So we are in a very risky environment. Our neighbors, if our neighborhood doesn't stay stable, it affects the economy. And what happens in Pakistan, Afghanistan affects us a lot. External economic shocks obviously affects us. Oil at $150 will affect us. And India is one of the most vulnerable to climate change in the sense that one or two bad monsoons will have a big effect. One maybe not so much, but two bad monsoons could really create lots of problems for us. Internal, there are many risks. The bet that everyone's making is that the country will pay attention to economic growth and that there will not be communal disharmony of any magnitude. Not individual incidents, but that there will not be. And that's a bet, that could slow things down and affect it. If the bureaucracy doesn't speed up across the board, as we talked about, that could slow it down. Political confusion in Rajya Sabha is just a metaphor for the current government doesn't have a majority in the Rajya Sabha, it has a majority in the Lok Sabha, which is the lower house, and therefore that affects what laws can be passed and not passed. Key man risk, of course there's a key man risk in here. I think everyone should hope that that risk doesn't come through. And long term, many of the things that we've talked about today, I think will help the economy a lot. But over the long term, fundamental improvements in education and healthcare are critical. Every country that has gone to become a middle income country, if it doesn't have natural resources, is dependent on the quality of education and healthcare, education particularly. And if, under almost any circumstances, our education system is not, it's not up to snuff. So we would like to make sure that happens. So anyway, there's a fair number of risks out there, and I think it's impossible to make a prediction. We hope that what I said earlier, which is there is a reasonable probability that we will grow above 7% in the new series. And the question is there enough being done to drive that 7% towards the 10% line? So with that, thank you very much for allowing me a quick just put it back. Can you put it back on the first slide? Sorry, I took a little longer, but it's a big economy to talk about. Questions? Okay, so ground rules for questions. It must be a question. Okay, and it must be a short question. Okay, with that, please.
I noticed in the center of your 25 lines was media and entertainment. And I don't know if that was an accident or not. And I know about outsourcing animation, visual effects. What do you mean, or what does the government mean by Make in India media and entertainment?
Actually, media and entertainment comes about more because of the jobs it creates in India. Right now, Indian movies, Indian fashion, Indian entertainment, Indian music is growing around the world, and it is growing in consumption in India. And for every dollar that, for every rupee that's spent on entertainment creates more jobs than in some heavy manufacturing. Okay, so that's what we mean by that.
But what would be made in India? What would foreign companies make in India?
They could do production, animation, graphics. Actually, animation is a huge business already. Post-production graphics is a huge business. So it would be that.
So you did elaborate on the fact that how is rise of our risk to India, because we are seeing it more of competitive, but it's developing in India?
No, it's first of all, we all want, one of the beauties about democracy is that you have to stand for election every few years, right? And then the people can vote how they want. So the reason that I put that as a risk is not pro-ARP or anti-ARP, but if the victory, see, one of the reasons that many actions can be taken was because the current government at the central level has a mandate that allows them to move through the lower house of parliament. If the ARP victory means that the political mandate is weakened, and therefore we go back to much of the previous coalition politics that happened many years ago, then that's a risk, because then you can't make any change. It's not, I mean, in fact, in a democracy, having different ideas compete is fantastic. So I didn't mean it in that spirit. I meant it in the spirit of the mandate. At the back. Yes, go ahead. Yes, you.
I had a question about federalism. How is that going to affect the government's recent decision to give more power to states? How is that going to affect the government's ability to execute and implement on the ground?
Thank you. Actually, that's one of the themes that I should have articulated on. Last year, I edited a book called Reimagining India, in which one of the big themes is the state central account. So this is the first time that we've had a chief minister of a state become PM, and therefore a very strong understanding of what happens at the state level. So it was articulated as we are going to have cooperative federalism, but also competitive federalism. Okay, so the states compete with each other. By and large, what's currently the structure is that the central government has a series of taxes, and from those taxes it allocates a certain amount to the states directly to do whatever they want, and then some amount is allocated to central government programs, which it gives to the states. What they're going to do now is more of the money will go directly to the states without going through a particular program, and therefore the states, I think, will have to play a bigger role. So at one level it's great, because the most experimentation is occurring at the state level. And so if we see some states being more successful, hopefully other states will say, why are they successful, and do something. So I think this era of cooperative or competitive federalism is actually a very good and long-term trend that is actually very good for India. It is only possible today because if you read the history of India since independence, there were times when people were worried that states would want to become independent. In that era, many things were centralized as a way to hold it back. Today, because the risk of that seems to be less, there is more of an ability to decentralize to the states, and I think that's a good sign. Let me go to this side since I have been. Please.
So I wanted to understand when you think the budget will start to address and take on more structural reforms. Like, this was an ideal opportunity to do something like slash the fertilizer subsidy, given falling energy prices. And in spite of the government having won the biggest majority in 30 years, it doesn't seem to take decisions. The question is, when will the government start taking hard decisions like slashing fertilizer subsidies?
So if I could rephrase the question. right? Because I think in the question is your answer, isn't it? The answer you're looking for. I think one of the biggest, the $50 billion that the government got as a result of oil prices going down could have been used in many different ways. But the fact that diesel and petrol prices have been decontrolled and taxes have gone up on it is a very powerful way of addressing some of the subsidies. So if you look at the vast majority of subsidies, some of those have been addressed, some hopefully will get addressed over time, and some you could make a decision that we're going to keep them. Like, for example, certain subsidies on foods and others we could keep. On fertilizer, this budget didn't address that, change the subsidy levels, right, to address the question. But I think it would be wrong to say that not addressing the fertilizer subsidy question is an indication that the government is unwilling to make decisions, right? It took many other decisions. It didn't take the fertilizer subsidy. And if you were a fertilizer company, you would be very happy that they didn't take that decision. But I think some of those will come. Some are politically infeasible, and some are, some will come at a different stage. That would be my. Sorry.
If you could talk to us a little bit about the Quality Council of India as to how big is the team, what are the responsibilities, and what are the KPIs on which the success is going to be measured?
So I'm not going to, it's a much longer discussion which I'm happy to have with you, but I'll give you 30 seconds of it, which is, if you think about Make in India, you have to make in India with quality. As the finance minister said, nobody buys goods these days if they are not of the quality and value that you can produce, because it's a competitive world. Just because you made it doesn't mean anyone will buy it. So if we don't produce with quality, then in fact, Make in India doesn't work, number one. Number two, if we don't provide services that have high quality, it doesn't improve the quality of life for the citizen, right? So you have to improve both of those. Improving both of those is a 20-year, journey. You can't do it right away, and what we hope to do is to get started on it, and that's what we're doing. It has a staff of about 150, and then we have about 5,000 contractors to help on that. Please.
Well, that's a very good macro picture which you have painted. My question is, what can the corporate sector do besides what it is already doing to contribute to the success of the story that is India?
So one of the charts that I had, thank you, that's a very good question. One of the charts that I had there talked about the fact that private investment in India has not yet picked up as much as we would like. If you want to grow at 7 to 10%, private investment has to grow at 15% a year. It's currently growing at 2%. So the best thing that corporations can do is to, in fact, start investing in India and start hiring in India and create jobs in India. That is the single best thing that the corporations can do. We all realize, as corporate, I've spent 34 years in the corporate sector, that no corporation is doing it out of the goodness of its heart, right? They would like to make a difference in India, but if it doesn't make any money, they're not going to invest, right? So we have to create the conditions such that as it gets close to earning the ROIs that companies hope for, that they will start investing. I think that's number one. Number two is, we have this huge, there's a lot of discussion about corruption, which I didn't put out here. But, corruption slows down economic growth in countries around the world by a certain amount. And corruption is a two-way street, right? So if all corporates decide that they're not going to have any corrupt practices, then over time, that also affects, if nobody's giving, nobody will take. And if nobody's taking, nobody will give either, right? So they can play an important role in ensuring that levels of corporate governance in India are also driven to a higher level by corporates. So those would be the two big things that I would put. At the back there.
We have time for just one more question, please.
So you mentioned one of the internal risk is healthcare. So what are the key parameters that you think need to improve on that?
I think we have some healthcare folks in here, so they can, I'm sure, give you a better answer in that. But fundamentally, India spends a very low proportion of its GDP on healthcare. The quality of healthcare that is delivered to a vast majority of its population is actually quite bad. Okay? As we go from $1,500, $1,800 GDP per capita to $3,000 to $5,000, the total quality of healthcare delivered to individuals has to change. It's one of the few countries in the world where the majority of healthcare expenditure is done by the private individual, not the state. It's one of the very few countries, and so that also has to change. That's what I meant by healthcare. My scheduling chief has said enough. So thank you very much. And